Let us talk about something most people feel but rarely say out loud. A rideshare driver in Atlanta earns more per ride than a rideshare driver in Mumbai, even if both work the same hours. A developer in Silicon Valley can make 5 times what a developer in Manila earns, often solving very similar problems at a very similar skill level. The work can be almost identical, but the paycheck is not. Why? Because in the gig and freelance economy, your income is shaped by more than your skill. It is shaped by your geography. Where you live quietly decides what your time is worth. Now, here is the reason you are watching this video. Prop trading breaks that rule. When you load a chart for the E-mini S&P, the E-mini Nasdaq, or Gold, the platform does not know whether you are in Atlanta, Mumbai, Nairobi, or Madrid. The tick size is the same. The rules are the same. The profit target is the same. The payout split is the same. In a prop environment, your location stops being the ceiling. That is why, at Technests, we do not talk about prop trading as a cute side gig. We frame it as a potential global career path for serious, disciplined traders who understand the risks and are willing to work within structure. Let us walk through that together. First, the gig economy trap. From the outside, gig work and freelancing can look flexible and modern. You set your own hours, you pick your own clients, you work from wherever you are. But structurally, it is capped. If you drive, deliver, edit, code, or consult, you are paid by the hour, by the task, or by the ride. The moment you stop working, the income stops. There is no mechanism for the work you did yesterday to keep paying you tomorrow. That is the first trap. You are always trading time for money. The second trap is geographic bias. Take 2 freelancers with the same portfolio, the same skill, the same work ethic. One lives in a high-income country. One lives in a lower-income region. The first can charge rates that are considered normal locally. The second is told, often by the same platforms, that market rates in their country are much lower. The same work, different price, determined by a map, not by competence. The third trap is that there is almost no real scaling. You cannot drive 2 cars at once. You cannot deliver food to 2 houses at the same moment. You cannot do 10 client calls in parallel. You can raise your rate a little, you can work more hours, but you cannot run 10 versions of you in parallel. Your income line is still tied directly to your own body and your own time. And then there is platform dependence. Algorithms change, fees increase, routing logic shifts, rating rules are updated. None of those decisions are made with you in the room. One update and your effective hourly rate can drop overnight, even though your effort did not change. For millions of people, gig and freelance work is not leverage. It is survival. Now let us shift into a different model. Why is prop trading different? In prop trading, you are not renting out your time. You are operating capital. The first key difference is that the product is standardized everywhere. A $50,000 E-mini S&P evaluation from a given prop firm has the same profit target, the same drawdown rules, and the same basic structure whether you are sitting in Atlanta or in Mumbai. The contract does not adjust itself to local wages. The second difference is access to capital. You do not need $50,000 of your own savings. You are not asked to risk your family's emergency fund. Instead, you pay for an evaluation, which might cost somewhere between $100 and $500, and you are tested on your ability to trade within a clearly defined rule set. The firm takes the capital risk. You take the behavioral and execution risk. The third difference is that you scale accounts, not hours. You cannot clone yourself to work multiple gigs simultaneously, but you can progress from 1 to 2 to 5 prop accounts as your structure and discipline improve. With proper systems, you can orchestrate those accounts in parallel without sitting at 10 screens clicking buttons manually. The fourth difference is the role of automation as infrastructure. At Technests, that is where Dr. Markets and TradeRx come in. Dr. Markets is designed to help you build rule-based, prop-firm-friendly trade plans. It focuses on constraints first. Risk limits, event windows, drawdown boundaries, the mechanics of the account itself. TradeRx then sits on the execution side. It takes those plans and runs them through strict filters before any order is allowed to hit the market. It checks balances, daily loss, event restrictions, position size, and other risk parameters in real time. It also logs both the trades that are executed and the trades you attempted to place that did not meet the rules. Put together, that means a trader in any time zone can run a more systematic, more disciplined, more auditable operation than if they were trying to manage everything manually. In prop trading, geography is no longer the main limiter. Structure is. Now, let us bring this to life with some very human stories. These are examples, not promises. Real trading involves risk, and results always vary. First, Atlanta, replacing a corporate ceiling. Picture trader A in Atlanta. Their background is mid-level corporate finance. The job is not terrible, but it has a clear ceiling. Pay raises are slow. Restructuring is always lurking. The sense of control over the future is fragile. They decide to treat E-mini S&P trading as a possible career track, not as a lottery ticket. They start by purchasing 2 S&P evaluations. They use Dr. Markets to define a no-discretion strategy that fits the firm's rules. Entry conditions, exit logic, maximum daily loss, and event filters are all locked in before the session begins. They connect those plans to TradeRx. TradeRx enforces daily loss limits. It controls trade timing. It blocks orders that would violate rules. It logs every attempt, so this trader cannot hide from their own impulses. Do they win every day? No. Do they have losing periods? Of course. But over the first 6 months, something important happens. Across their S&P accounts, their average payouts settle around just over $5,000 per month. The corporate job stops being a financial lifeline. It becomes optional. They may choose to keep it, or they may choose to phase out of it, but the power dynamic has shifted. The salary has effectively moved from a human resources department to a pattern of prop firm payout cycles. Nothing about the S&P chart cared that they were in Atlanta. What changed was how they structured their work. Now, let us go to Mumbai. Breaking local salary limits. Meet trader B in Mumbai. They are 27 years old, working as a freelance developer. Their skills are strong. They can solve complex problems and deliver real value, but the local client rates are low. International platforms often push them toward discounted pricing based purely on their location. Saving enough to trade large personal accounts is not realistic in the short term. But they do have access to proper valuations. They invest around $400 into 2 Nasdaq evaluations. They run both through Dr. Markets, which designs plans that respect each firm's targets, drawdowns, and rules. They push all executions through TradeRx, which enforces contract limits, daily loss boundaries, event restrictions, and no discretion entries. Roughly a month later, both evaluations are passed. Again, not because every trade was perfect, but because the rules were respected and the structure held. As they move through their first funded cycles, their average monthly payout stabilizes around $6,100. In that context, their trading income is roughly 5 times higher than a typical local mid-level engineering salary. Their workday shifts from chasing new clients and negotiating rates that feel unfair to monitoring and refining a structured trading operation. They are trading the exact same Nasdaq product that a trader in New York or London sees. Same tick size, same volatility profile, same prop firm targets. The difference is not in geography. The difference is in mindset, risk management, and execution. Now, Manila. Exiting the grind, one contract at a time. Trader C lives in Manila. They juggle food delivery and other gig work. Their schedule is long, their income is heavily exposed to platform policy changes, and their stress level is high. A change in fees or incentives can erase months of effort. Their first goal with trading is not, get rich. It is simple. Add some stability. They start funding gold evaluations around the gig shifts. They use a conservative rule set. Stop losses are clearly defined. Daily loss limits are relatively tight. The entire plan is built around avoiding breaches rather than chasing spectacular home run trades. Trade RX sits in the middle of the process. No trade gets through without passing risk checks. Attempts that collide with the rules are blocked and written into the log. At first, payouts are modest. A few $100s here, a bit more there. Over a year, as they repeat that cycle and refine their process, their gold payouts average around $1,800 per month. Gig work shifts from being the core of their survival to being one of several income sources. They can start saying no to unfair routes, bad hours, or unsafe conditions. Savings start to grow. Choices expand. The platform no longer dictates every line of their budget. Again, trading did not remove risk. It did not produce a straight line equity curve. But it allowed them to step off the lowest rung of the ladder and design something more independent. Now, let us zoom out. Why can prop trading scale in this way while gig work almost never does? In gig work, you are physically limited. You cannot be in 2 cars at once. You cannot deliver 10 meals at the exact same time. You cannot have 3 client calls simultaneously with one voice. Your earnings are linearly tied to your time and your energy. If you get sick, if you need to travel, if you burn out, the income stops. There are no parallel copies of you to keep things moving. In prop trading, if you have the right infrastructure, the scaling factor is different. You can run several S&P accounts at the same time. You can combine Nasdaq and gold across multiple firms. You can design payout schedules that resemble a portfolio of income streams rather than a single paycheck. This is exactly where automation matters. TradeRx helps ensure account-level rules are not casually ignored in the heat of the moment. It applies checks account by account, so a lapse in concentration does not automatically turn into a multi-account catastrophe. Dr. Markets keeps the planning side grounded in firm rules instead of impulse. You are not waking up and guessing. You are waking up and executing a prepared structure. In that configuration, you stop being a trader clicking buttons and start becoming an operator of a trading business. Now, there is another layer to this, the psychology of global equality. Prop trading forces you to confront a different internal story about your own value. In the gig world, it is easy to think, rates in my country are just low. My local market does not reward this skill. Platforms do not value workers where I live. Those feelings are often justified. But on an E-mini S&P chart, the tick value is the same regardless of where you log in from. On a Nasdaq chart, the profit target in an evaluation does not shrink because your local currency is weaker. On a gold chart, the stop-loss size allowed by the rules does not expand because your city is more expensive. The external constraints are standardized. So the uncomfortable but empowering questions become, am I running a structured plan, or am I improvising? Am I enforcing rules through systems and automation, or am I hoping my willpower is enough? Am I thinking like a career operator, or am I behaving like a short-term gambler? That shift from, I am limited by where I live, to, I am primarily limited by my systems and my discipline, is where Technests lives and works. Now, even in trading, geography used to give some traders real advantages. Faster and more stable internet. Better hardware and setups. Easier access to education, mentors, and serious communities. Those advantages have not vanished completely, but with the right tools, the gap can be narrowed dramatically. Dr. Markets provides systematic, rule-based planning that works the same way for a trader in Atlanta and a trader in Prayagraj. TradeRx executes trades with the same discipline whether you are in a home office in Madrid or a small apartment in Manila. Technests communities do not revolve around hot signals and random calls. They revolve around shared structures, shared rules, and shared experiences using automation under real prop firm conditions. The playing field will never be perfectly equal. Markets carry risk. Life circumstances are different. But the core access to standardized contracts and disciplined execution is now far more globally available than it has ever been. Let us quickly address some common questions that traders in different countries often ask. Can someone outside the United States really earn the same payouts? Structurally, yes. A $50,000 S&P funded account with a 10% target and an 80% payout split is the same contract whether you are trading from Chicago, Nairobi, Prayagraj, or Manila. The gross payout amount is the same. How far that money goes and how you manage it locally is a separate question. What about local tax rules? Taxes are deeply local. Different countries treat prop trading income in different ways. This is where a local accountant or tax advisor is essential. Prop firms will typically pay you the same way regardless of country, but how you report, save, and plan around that income is something you need to structure within your own legal system. Isn't trading too risky to rely on? Trading is risky. Prop trading is not an exception. Accounts can be lost. Evaluations can fail. Markets can behave in ways that surprise even very experienced traders. At the same time, relying on a single gig platform or a fragile employer can also be risky. One distinction with prop trading is that your personal capital at risk is often limited to evaluation fees or resets. That amount is usually smaller than the savings required to trade very large personal accounts, and sometimes smaller than a week of intense gig work. But that does not make it safe. It simply means the risk is structured differently. Do I have to trade United States hours if I live abroad? Not always. S&P, Nasdaq, and gold futures have meaningful volume during London hours and during parts of the Asia session. Many non-United States traders design their trading plans around time windows that align with their sleep, work, and family schedules while still respecting prop firm rules. Can I really manage all of this if I still have a job or gig work? That is precisely why automation exists. The idea is not to glue yourself to the screen. The idea is to define your plan, your risk parameters, and your time windows in advance, then let a system such as TradeRx enforce those decisions. You still need to review, refine, and make higher-level choices. But you are not manually watching every tick and hoping you do not break your own rules. So where does all of this leave us? The gig economy is very good at selling survival. Log in, grind, hope the algorithm stays kind. Prop trading, when approached with structure and realism, opens up a different possibility. Operate capital inside firm rules. Aim to build something that is portable, scalable, and not dictated by local wage levels. Whether you are in Atlanta or Prayagraj, the E-mini S&P chart does not change. Nasdaq volatility does not calm down because your passport is different. Gold does not adjust its ticks based on your neighborhood. That is why Technests positions prop trading as a potential global career path, not a purely local side hustle. Our long-term vision is simple and ambitious. By the end of this decade, we want to see 1 million traders worldwide running automation-supported, rule-driven prop operations. Not because trading is easy. Not because success is guaranteed. But because the combination of standardized markets, firm-provided capital, and robust automation creates a unique kind of opportunity. The core building blocks are the same everywhere. Doctor markets for plan design under real constraints. Trade RX for disciplined execution and real-time feedback. Community for accountability, reflection, and continuous improvement. The battlefield is level enough to matter. The contracts are standardized. The firms do not reduce your targets because your rent is high or low. The remaining questions are about your structure, your discipline, and your willingness to treat trading as a serious, risky, demanding profession rather than a quick escape. If you are stuck in gigs that pay less simply because of where you live, you are not completely trapped. With the right mindset, the right tools, and a lot of honest work, you can begin shifting from location-bound survival work to a more global, structure-driven trading career. At Technests, our role is to support that shift, not by promising miracles, but by giving you better planning, better enforcement, and a healthier framework for thinking about prop trading. You do not need to outwork the world in local hours. You need to plug into a structure that pays by standardized rules rather than by geography. If that resonates with you, explore what we are building at Technests, learn everything you can about prop firm rules and risk, and move carefully. Global markets will not suddenly become safe or easy, but they are, for the first time in history, accessible in a way that is almost indifferent to where you live. That is the real story behind, from Atlanta to Mumbai, not that anyone can win automatically, but that the battlefield is finally shared.